Hi there. Tell me if you can believe this. The market cap of JD.com is about 34 billion. Look at this number, 34 billion. And their total cash on hand is of about 42 billion. By the way, I've also included their investments. So the total cash, 42 billion, compare it to the market cap of 34 billion, you can easily see that JD is traded below the cash on hand, which is 42 billion. As I said, they have 15 billion in cash and cash equivalents, 1 billion in restricted cash, and 70 billion in short-term investments. Plus, you add their investments, which are around 8 billion, 8.5 billion. So in total, 42.8 billion. That's a lot of money. And now you have the opportunity to buy this business below the cash on hand. That's great. But as we can see, year to date, the stock price is down 18%. Why this? Well, people don't like Chinese companies at all. JD is not alone. Also Baidu, Tencent, Alibaba, they are all down a lot. A decline of more than 50%. For JD, a decline over 79%. However, if you compare their past performance to the current numbers, you can see that in 2014, the stock price was about $20 per share. And now it's around $22. So an increase of 10% in the last 10 years. So this is quite bad, especially for investors who bought this company in 2014. This is quite bad. However, if you look at their results, their revenue, you can see that it has grown a lot in recent years. And it is expected to grow even more in the future. Based on the analyst estimates, the earnings are expected to be around 4 billion, 3 to 4 billion, and their free cash flow around 4 to 6 billion, more than 6 billion in 2026. So this company is expected to generate more profits in the future, more free cash flows, and that's a good sign. Now, as I said, the total cash position is around 42.8 billion. Of course, you also have to check their debt. If JD.com has some debt, because if they have 42 billion in cash and their debt is about the same, then you did nothing. You have no marginal safety. So let's look at their debt. If you add up all their debts, the short-term debt and long-term borrowings, you can see that the total debt is about 6.3 billion. So you subtract this number from the total cash, 42.8 billion, and their net cash position is about 46.5 billion. So this is the final number you should be looking at. Compare this number, 46.5 billion, to their market cap, which is around 44.8 billion, almost. So you can easily see that the stock price is traded below the cash on hand. There is a small difference, but compared to their future outlook, that JD is expected to grow more in the future to generate more profits, more free cash flows, JD is quite a bargain at the current level. So if you want to buy this business, JD.com, if you like their business model, how they operate, then at the current level, at the current stock price, $22, you have a margin of safety. You can rely on their cash. Plus, if you look at the latest results, you can see that the revenue in the third quarter was about $34 billion, an increase of 1.7% from the last year. So be aware that the revenue is about 34 billion only for one quarter, and JD has 4 quarters. So 44 billion in revenue, and the market cap is about the same, 44 billion. That's amazing. Of course, what matters are their profits, their free cash flow. So if you look at their net income, was about 1.1 billion in the fourth quarter. As JD has 4 quarters, that will be about 4 billion, even more than 4 billion a year in net income. And you can also see their free cash flow for the last 12 months, which was around 5.4 billion. So that's quite a lot. They have a lot of cash on hand, 46.5 billion, plus you add the free cash flow of about 5.4 billion a year. Of course, if you also add the multiple to this number, then the fair value of JD.com will be more than 44 billion. At the current level, you can have an easy double from this business. Of course, if you want to be more precise, to calculate the fair value based on the analyst estimates, as you can see, the market expects of about 6 billion in free cash flow from JD in the next 4 years, then the fair value may be around 66 billion for a 10% annual return. By the way, ignore this market cap. Look only at the fair value market cap, which is about 66.8 billion. This is the fair value that you may expect from JD.com. And as you can see, the current market cap of 44 billion, you can have an easy double from this level, plus a 10% annual return. So when the market cap reaches 66 billion, your return will be about 10% a year. As now the market cap is below the fair value of around 44 billion, then your return will be even higher. It will be about 40% a year for the next 4 years. Of course, if only JD.com makes more than 6 billion in free cash flow. This can happen. So this is a nice return, 40% a year. That's quite great. As I said, at the current level, JD.com seems a great investment, especially as they have a lot of cash on hand, over 46 billion. JD is a bargain at the current level. Of course, there is also risk. Maybe JD won't grow that much in the future. Their multiple may be lower, they won't make 6 billion in free cash flow, they'll make less, and the fair value may be around 44 billion. But still, at the current level, you have a marginal safety. By the way, in this valuation, in these tables, I haven't included their cash position, which is about 46 billion, their net cash position, 46.5 billion. So, besides this fair value of 66 billion, you also add 46 billion. So in total, it will be around 100 billion. But as I said, you invest in this company only if you like their business model, what they're doing, and you are also aware of the risk, because this is a Chinese company. Many things can happen in the future. That's why you have to be very careful how you size your investment. And in the long term, your investment will pay off. Your return will be quite nice. As I said, you can easily more than double your money at the current level. Your return may be around 100% if the stock price goes to $46. This can happen easily. You don't need a lot of great results. The stock price can go to $46 easily. But of course, you also need patience. This may happen next year, this year, or in the next 5 years. That's why nobody knows when the stock price of JD.com or other Chinese companies will go up, when they'll rebound. Nobody can predict the market. But you can predict when the stock price is undervalued, as is now the case, and when it's overvalued, as it was in 2021. However, based on their current numbers, how much money JD is making, $100 per share may be a good price for a 10% annual return. But be aware that you have no marginal safety. That's why, when you invest in any company around the world with a marginal safety, many great things can happen in the future. You are protected against the risk. If something bad happens with JD, maybe they miss a quarter, their earnings decline, or they face other Chinese regulations, then the stock price may decline even more. But when you invest with a margin of safety, you are protected against those bad news or other bad results. So, it's up to you. If you want to invest in this company, you look at the risk, which now is quite low, and also the reward. How much can JD grow in the future? If you assess those probabilities, you can make a lot of money. Buy low and sell high. So that's it for this video. And if you have other questions about JD.com or other companies, then please let me know in the comments.